we see the price action that had happened last week, we can say that, so you can see that from 20th, the market opened around 5380 and it came down till 5330, and we had mentioned many times that this 5320 to 5300 can be a possible support zone which can support the trend. And the next day also the market opened up and it went up higher, and we know that this 5400 is providing some resistance and it pushed the market down, but the market didn't come below this previous low. You can see the week's low. Below the week low the market didn't came down, and again there was a pullback. You can see again the market tested this 5400 and it fell down. So the market was really struggling in this zone to stay above 5400. The next day the market opened higher, and you can see that the market opened above 5400. It is a spiked up opening. That means after the price opening you would have seen the LTP staying somewhere around 5400 or above 5400. But the thing is that the market took the clear resistance around 5420, and again a failure to sustain above 5400 pushed the market down till 5300. So we may notice that before in the previous week we were saying this 5300 and 5320 can provide a possible support, can be a very good deciding and trend deciding zone for crude oil. If you want to know the reasons, you can go back to the archives in our website or in YouTube and you can see that. So the next day, that was on 24th, the market opened lower, but it couldn't stay below 5300 and it was supported by the average also, which we are following a long term, a medium term. We can say that it is not a long term, very long term average, a medium term average. It was supported by the average and it pushed the market up. So the market was comfortable in staying above 5300 and 5320. That pushed it. This is the Friday market, so that pushed the market higher. And you may notice that yesterday the price opening was very spiked up, like what happened here. You can see exactly what happened here. That is on 23rd, the same thing happened yesterday. The market opened up and it is a spiked up opening. There is no doubt about the trend. So we don't suspect the trend, but we should have there was some indication here in this zone above 5400 and 5420 that the market had provided. So you can see how many tops it has formed: one time, two time, third, and now it is a fourth time. So if we keep this chart like this, so we can see that the price was taking a good support around 5400. So it was taking a support around so many times. The market hit 5400 and it was every candlestick represents one hour. So means right from the price opening, how long the market was staying above 5400, which means the market is really trying its best to put something above 5420 also. Even tested this zone and you can see there was a failure. Again a failure pushed the market clearly down, and again the price reached the zone. Even we can notice that the price broke the zone and came down lower and the market closed lower. So this is the case what had happened in crude oil till yesterday. Today's price opening, you can see that yesterday, seeing the price action and seeing the whole scenario here, you can see that we can say something is happening on tops. So the market is really struggling to stay put something above 5400 and 5420. So this is the zone which is getting a real hit here, but we cannot. It has provided us a clear indication also that crude can possibly move down, but we need another confirmation also, because for simple reason we can say that the price has bounced back from these zones. So this zone is a clear zone where the market, you can see after breaking this zone the market moved higher. So that is the reason we are targeting on this zone. But since it is the second time that the price has closed lower, we need to be very careful in trading with the trend. So there are a lot of possibilities, because only during the trading session we can see the possible outcomes. So what are the possibilities that the market can be traded in the way that the market can be traded? Today's price opening is expected to be more or less around in and around the same zone. So you will be seeing the same zone. Price can open just a bit of higher than the previous day's price closing. Based upon the NYMEX price directions, we can say that just a bit higher you can expect, but it can be well within this 5,320 and 5,300. But the scenario, there was a little change in the scenario where the average indicates up, but here when the price touches, the average was staying lower, but here the average is staying higher, which is indicating that it can provide a possible resistance around 5,320. So today and for the coming days, it is going to be a very difficult zone for trading crude oil, because this is called a trend deciding zone. If you can put all your effort in watching and monitor this zone carefully, we can easily move with the trend. So always these types of zones will be difficult, but these types of zones are the potential zone where you can make good profit. If you follow the basic technicals and if you follow the price actions very carefully, you can clear the zone easily. So the possible outcomes are: have 5,320 as a resistance, and till 5,330 you can go for selling. Yeah, that is a possible outcome, which means that the market can go down. If you find something above 5,320 very comfortably, and it's like what happened here, you can see the price stayed above the zone very comfortably, that pushed the market higher. If you see a price action like this, then the possibility is that the market can move higher. So this is a option. One option is for selling, because since it is a trend deciding zone, based upon the price actions only we can decide where the market can move during the trading session. So you should be prepared for this type of zone, since because it is a trend deciding zone, it is not a trending zone. A trending zone means that the price stay with the trend, so that anywhere you buy it go for up. So that is not going to be the case that is not going to be this case. So you can, the option A is sell till 5,320 and have 5,330 as a stop loss, then go back and you can expect the market to test this 5,260. We can say that this 5,260 is can be a very potential support zone, because it indicates $94.2, which was the trend deciding zone in NYMEX. So this is the one possibilities. So the other possibility is that see what is happening in and around this 5,300 and 320, and based upon the price actions and the pattern formation you can decide. If the price stays above 5,000, you can see like to 5,300 and 5,320, if there is any breakup, so you can see that a breakout above this 5,320 you can go for buying. So you can the another safest thing is that wait and see. So stay away, wait and see unless until you get a clear confirmation, then enter into the market. So till 5,260 there are possibilities that the market can at any time it can show a bounce back. 5,220, that it is a caution. It doesn't mean that you should book profit here and come out. It depends upon the available fund your trading account. So carefully pick this zone 5,300 and 320. So if you can pick this zone above or below this zone easily, you can make a good profit and we will be leading the trend. So till what we expect is that till $94.2, if you are following NYMEX, the market has got the strength to pull to show a pullback. But also this 5,320, all our MCX technicals indicates that the market can possibly come down. So stick on to this zone of 5,300 and 5,320 very carefully and watch this zone. Always place a stop loss whenever the market is trading in a trend deciding zone, because if you miss this zone or if you don't place a stop loss here and there above or below the trend, then there are possibilities that may end up in heavy loss also. So let us see what's going to happen during our trading session, and thanks a lot for watching our videos. Happy trading. Take care. Bye.